Bloomberg Audio Studios.
Podcasts, radio, news.
Joining us now, Mohamed El-Erian, where we're supposed to talk about Fed policy, this, that. Well, throw it out the window. Mohamed El-Erian is definitive in game theory and thinking about the probabilities, the risk, the uncertainty of given events, including what we saw yesterday. He is advantaged by being at Queen's College, the University of Cambridge, which means he's advantaged by one of the world's great Asian programs with the leadership of Andrew Marsham, who's just absolutely definitive on these studies. Dr. El-Erian, I want to go back to Martin Feldstein just a year and a half before he died. The Japanese economy is a paradoxical mixture of prosperity and failure. Marty Feldstein was so far out front on their cyclic failure to be normal. When Japan blew up yesterday with their new policy, when they blew up yesterday, the equity market decline, how does that redound over to the American and the Western markets?
Tom, thanks for having me. And I thought we were going to go straight to the miracle of the Mets still being in the wild card chase.
That is a miracle. It was discussed this morning.
It is a miracle. Look, when you run an economy at low growth, high debt, zero interest rates, and quantitative easing for a number of decades, and that's what happened to Japan, then you get first the contrast that Marty Feldstein correctly pointed out, which is the flow numbers are awful, but the stock numbers are great. So a wealthy economy that nevertheless doesn't grow. But importantly, you encourage that wealth to go seek higher returns elsewhere. And that's what happened. The Japanese financial system became very large holders of other people's securities. Then when you change the regime and you raise interest rates, the currency appreciates, inflation comes back, suddenly people cannot refinance these positions, and either actual or perceived sales. So what happened in the last few days is a shock that started in the US, migrated to Japan. It then exposed a vulnerability that a lot of people knew about, but didn't take as seriously. And then that got amplified, and then it came back here Monday.
The thing to me that's so important here, Mohamed, and this goes back to your arch excellence in game theory, is a T decision. Japan has to make a T decision, except it's not like 10 years ago. Whaley at BlackRock says China, if they're lucky, will do 3% real GDP growth. No one's prepared for that, I understand. How does Japan adjust given the new struggling China?
So they have a financial issue and an economic issue. The financial issue will be easier. Forbearance, regulatory forbearance. So they will not force sales from their financial institutions. They will have a lot more patience with the mismatches that the financial institutions have. In terms of the real economy, they face the same issue that most countries face, which is, with the exception of the US, and even the US has a question mark over it, there isn't much growth in the global economy.
Yeah.
So they will be competing for a limited pie. And China is way ahead of other countries trying to get a bigger share of that pie.
I can't emphasize enough, Paul. Bruce Kassman at JP Morgan was brilliant on this. In a global tepidness, disinflation is the overlay that affects us.
Mohamed, when I started on Wall Street in the mid-'80s, a tour of duty in Tokyo was an absolute must. That's how important Japan was to global Wall Street. But then for the last 25 years or so, we just never talked about it. What changed in the last year or two that people like Warren Buffett are saying you really have to pay attention to Japan? What's changed?
So I think what's changed is the hypothesis that they are finally exiting multi-decades of economic mediocrity. That is, I think, what has changed. And that's why up to July, the Japanese stock market was the deer. I mean, people fell in love with the Japanese stock market in a way that they haven't done for a very long time. That is what has changed. But again, it's important, exactly what you said. most people stop looking at Japan. So the understanding of Japan is not as deep as you'd like it to be in Wall Street.
All right, Mohamed, I'd love to get your thoughts while we have you. What did you experience yesterday? What did you see yesterday in the U.S. markets? Because, boy, yesterday morning, it was because Tom Keene was not in, and the market didn't know what to do.
I took off yesterday, Mohamed. I was so stunned by the New York Mets that I needed a day of rest.
What did you make of yesterday's market action, Mohamed?
So yesterday was an example where we lost three anchors. We lost the notion of U.S. economic exceptionalism. That anchor was put in doubt with the data. We lost the notion of policy anchors because people started calling on the Fed to do an intermeeting cut. There was a lot of ridiculous things being said, and we lost Tom Keene's calm voice. So, it's incredible to see the 2-year move 20 basis points intraday. It's incredible. I got a sense that, and I put this on X, that we overshot on the fixed income side. So I was quite comfortable about Treasury yields coming back. I was worried about whether credit would be contaminated. Credit was not contaminated in any meaningful sense yesterday. That was a pleasant surprise. Yeah. And then I was reassured that we didn't have a market functioning problem.
With us, Mohamed El-Erian of Allianz, and of course, Queen's College, the University of Cambridge. We'll continue with Dr. El-Erian. We got green in the screen, not like we had on futures, but we'll take it. SPX up 0.4%, the VIX 32.48. That's elevated off what we know for years. Mohamed El-Erian, I want to go back to your game theory and the T decision. I take immense issue with the phrase emergency rate cut. There's no sense of history of what central banks should use. What is the T decision that Jerome Powell faces after yesterday's festivities?
The marketplace thinks it is whether to cut 25, 50, or 75 in September. That is what the marketplace thinks. I would bring you to the end of this month in Jackson Hole. He has a golden opportunity to regain control of the policy narrative. And to do that, he has to take some risk in laying out what he thinks the neutral interest rate is, in discussing, like the Bank of England has discussed, what structural changes are happening to the domestic economy and to the global economy. So for me, his T decision is actually at Jackson Hole, whether he just gives a mail-in speech or whether he tries to regain control of the policy narrative.
Well, and Mohamed, we're going to get the surveillance Gulf Stream out to get you to Jackson Hole for our coverage. Lisa Bramwitz and I will be at Jackson Hole. Wonderful. With that said, Mohamed, the heart of the matter is you mentioned BOE and particularly Lagarde's ECB, and she gave a speech last year at she wrote a paper last year at Jackson Hole on this. Mohamed, we're addicted. We're in a Greenspanian measured cadence. Does that fit the events right now? Or does Powell have to elucidate at Jackson Hole that we can lose measured and be more ad hoc, more unmeasured in our policy?
So it's really interesting because I think the Fed, being so excessively data dependent, has been actually quite ad hoc. The amount of pivots in the forward guidance we've had over the last 12 months is enormous. I actually have a slide that shows every pivot. And that's a problem because if you allow data to swing you so much, then you become an amplifier of market volatility rather than a stabilizer. So I think they need to be less ad hoc, less so data dependent, and have the courage to be strategic, have a courage to say, this is where we think the economy is going. I understand why they're not doing that. They tried it in 2021 with the famous transitory inflation call. They made a horrible mistake. And because of that, they've shied away. But that's what a central bank is supposed to do. That is what Greenspan did. That is what Bernanke did. That is what Yellen did. And I think it's important for this Fed to be not just data dependent, but also to have a forward-looking view of the economy.
That's a great point, Mohamed, because a lot of folks that we speak to, both in academia and in practice, say they're not looking at the right data. They're not looking at the real-time data. If they were looking at the real-time data, they would realize that the economy is in fact slowing, that inflation is in fact under control, and that they should be cutting rates right now. Do you go that far?
Yeah, that's where I was. I called for a cut last week.
Yep.
I've been arguing for the last 3 months that the US economy is slowing much faster than most people anticipate. Why? Because in addition to the data, I've been listening to the companies. I've been listening to what they're telling us about what they're seeing in terms of demand. They should have cut in July. They didn't. That was a mistake. They can still regain control of the narrative, but it is doing some really hard work that they need to do and having the courage to share it with the rest of us.
Mohamed, we got time for one final question, and I got 8 places to go here, but I'm going to do an audible on you, Mohamed, and we've done this for years. We had a turnover of power, a graceful turnover of power in England, and now it is the United Kingdom and in England descending into riots and protest on the streets. How do you observe that? What can be the government response to a persistent rioting as we see in Starmer's England?
I think it's a 2-step response. One is you first try to control the immediate situation, which is what they're trying to do. And then the second one is to look at the cause of this and the cause of the polarization and alienation of segments of the population. And it is about low, non-inclusive growth. The new Labour government has called growth a mission. They now have a growth mission. So it comes right at the top of their policy agenda. And I think that unless we start generating high, inclusive, durable, and sustainable growth, then the social and the political fabric will come under pressure.
Dr. El-Erian, thank you so much. With Queen's College, University of Cambridge, Mohamed El-Erian with an important and timely discussion, particularly there on Japan. To me, Paul, that's the heart of the debate. Is I get the idea of global slowdown and the central bank and the Fed and last week, et cetera, et cetera. But to me, it is the unwinding of a massive policy challenge. I look carefully.
Yeah.
I'm not going to go into it now. We don't have time. But the integran, the length, the duration of their inflation spurring experiment is unprecedented.
Yeah.
It's like ever. It's never. They've never put so much into escaping the malaise the great Marty Feldstein spoke of. That was wonderful, magical to have Mohamed ElErian talking on the great work of the late Martin Feldstein of Harvard University. Red and green on the screen, NASDAQ's fractionally negative. Dow up 45 points. The VIX 32.60, real churning of the market after what we saw yesterday. Thanks for all your comments, particularly search and subscribe out at Bloomberg Podcasts on YouTube.